Let's get to the markets here. Bring in Tom Lee here at Post 9, of course, Fundstrat Global Advisors, co-founder, managing partner, head of research, S&P target for year-end 6,300. Great to see you, Tom.
Great to see you.
You like to call them granny shots, easy plays. In your view, I have to imagine that list has gotten longer.
Mm-hmm. Yes. It is, but it stayed around 35 names, but just high-quality names that are in the right sort of themes. We have 7 themes, and as long as they're in more than one theme, they become a granny shot.
Higher conviction on those names, I imagine.
Yes, higher conviction, and these are names that I think most people are going to be familiar with because they're large-cap stocks.
There's some discussion about cyclicals today. That they make sense, and a lot of people are looking to 2016 for analogs, but some argue that there's not the commodity price support that you might have had in a prior cycle. You buy that?
You don't necessarily need commodity prices to help cyclicals.
Yeah, energy, but even materials to some degree. Some are.
Yes, that's right. Yes, so for those, I would say yes. I'd say the outlook for energy stocks isn't great, as good as people might expect under a Trump presidency, just because expanded drilling is lower oil prices. But for cyclicals like industrials and financials, this is, for all the things you guys were discussing, a great environment, including M&A and cost of money falling and animal spirits and deregulation.
Do you think there is real reflation risk in the next, say, 6 months?
That is something that we can see how markets are repricing, and there's a measure called 1-year inflation 1 year forward. So what does markets think 1-year inflation is a year from now? That has been creeping up. It's actually now at 3.6. It's been a trigger point in the past where the market starts to worry. So whether it's the deportation that's causing that, or fiscal spending, I'm not sure. But, it is, markets are starting to think about it.
Nvidia, the trailblazer in semiconductor technology, is on the cusp of a stock market breakthrough that has analysts buzzing with excitement. Piper Sandler has spotlighted Nvidia as their top pick, projecting a nearly 20% rise in shares after an already impressive year. What's causing this financial fascination? It's all about Nvidia's anticipated Blackwell chip and its formidable lead in artificial intelligence computing. Major firms such as Microsoft, Meta, and Amazon are part of this transformative trend. Analysts predict Nvidia is perfectly positioned to capitalize on explosive growth in the AI sector. But what does this all mean for the future? Let's dive into how Nvidia is potentially redefining the future of tech investment. Welcome back, everyone, to Investocracy.
To talk Nvidia today, which is now down about 1.9%, I think is not illustrative of how well this company has performed. Of course, anyone that's had a pulse in the market this year knows we're up 192% and a half actually on the year. So our big winner of the year, analysts today, only continuing to at least excite and enthuse those bulls in this name. So joining me now to discuss more is Caroline Woods, senior markets correspondent for the network. So Caroline, walk us through all the analyst coverage, because it does seem like this skews so positively. I know we're down today, but still been our big winner of course, the year.
That's right. And despite these red arrows today, the analyst coverage is very bullish. So as you said, Nvidia shares off almost 2% today after last week's 9% run higher. So taking a bit of a breather. But if you take a look, chip stocks in general are lower today, seeing red arrows across the board, likely due to Taiwan Semiconductor, that Reuters report that it's been ordered by U.S. authorities to halt shipments of its advanced chips to China. So, we mentioned the analyst coverage. Obviously, Nvidia reports next week. It's a late tech reporter, and some would say the bar is high based on that 192% year-to-date increase that we've seen so far this year. And analysts are optimistic heading in, and some are even boosting their estimates heading into it, and certainly boosting their price targets as well. So Piper Sandler raised its price target to $175 from $140, kept an overweight rating on shares, also promoted Nvidia to its top large cap pick, given its dominant positioning in AI accelerators and the upcoming launch of its Blackwell architecture. Thinks that the total addressable market for AI accelerators will continue to rise in 2025 by $70 billion, and thinks Nvidia is well positioned to capture most of the incremental market increase, saying while it will only cede a small bit to its merchant chip competitors. So, we talked about expectations going into earnings. Just so you know, Q3 estimates right now call for 74 cents per share on revenue of $32.8 billion. Piper Sandler's bull case is for revenue to beat by roughly $1.3 billion in the October quarter, and then around $1.5 billion in a greatly supply-constrained January quarter. So expecting a big beat in January as well. Says that management is likely to make comments about extremely strong demand for the H200, as well as the Blackwell and the Grace Blackwell. Meanwhile, Melius Research actually is even more bullish, with its price target hiking to 185 from 165. Also kept a buy rating on shares. Melius says it has a higher conviction in long-term estimates for Nvidia versus any other semis or system company they cover. Giving up on Nvidia here, they say, after its hit hopper, would be like giving up on Apple after the iPhone 1 or 2, saying while it didn't seem possible, we are even more excited about Jensen Huang's next chip than we were before. It's similar to the feeling around product cycles with Apple's iPhone some 15 years ago, just on a different scale. Meanwhile, Morgan Stanley is expecting another very good quarter, maintained Nvidia as a top pick, raised its price target to $160 a share from $150, also has an overweight rating on shares, expects another very good quarter, as I said, although thinks the bigger upward revisions will happen later in the year as the current environment is completely constrained on Blackwell and also partly on the H200. So Wall Street commentary, very bullish. I will say, I had Logan Gillen from Jewel Financial on the Future Show today. He was a bit more leery on Nvidia heading into this report, not because he doesn't think Nvidia, will beat with the numbers, but he just thinks it's priced to perfection. And similar to what we saw with Microsoft and Meta, he said, investors were looking for any chinks in the armor with valuation. So he thinks the setup is a bit tough for Nvidia heading into that report on the 20th. So he was saying he would need a substantial pullback before getting into Nvidia shares. So that was definitely more cautious than we're hearing from some of these Wall Street firms right now. But Nvidia shares under pressure today, as we said, down a little less than 2% right now, but up 9% this month, up 193% year to date, and up 200% over the past 1 year.
The world of stocks can often feel like riding a roller coaster, filled with ups, downs, and unexpected turns. But every now and then, a company like Nvidia comes along and seems to defy gravity. According to Piper Sandler, buying Nvidia is almost a no-brainer. Their updated price target sends a clear message to investors. Grab your popcorn because this show is just getting started. With a year-to-date share increase of 198%, Nvidia has been the star of the stock market thriller. Harsh Kumar, a well-respected analyst from Piper Sandler, has anchored his faith in Nvidia's potential with an ambitious price target of $175, up from $140. This comes in light of the anticipated contribution from Nvidia's Blackwell chip, projected to rake in between $5 billion to $8 billion in revenue as early as next year. AI accelerators, integral components enhancing the efficiency of AI and machine learning applications, are at the center of this advancement. Nvidia's strategic positioning is credited to their expectation of a $70 billion increase in the total addressable market for AI accelerators by 2025, with Nvidia set to capture the lion's share. Tech giants like Microsoft, Meta, and Amazon continue to pour capital into their expansion, creating a fertile ground for Nvidia's chips. It's almost comedic how these tech behemoths are unknowingly fueling Nvidia's unstoppable rise, but the growth trajectory seems no joke to the savvy investor. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Back to the video.
The numbers are astonishing when you start talking NVIDIA in terms of performance and the revenue growth, etc. There's been doubters along the way, fewer and fewer, as time goes on. They just keep falling off because they're just getting run over. I imagine more and more analysts will update as we get closer to the event. But, Caroline, I'd have to imagine that kind of the tenseness around this report will build, as this is probably, top 3 or 4 biggest events left on 2024's calendar is going to be next week's NVIDIA earnings. Is that the feeling you got?
Oh, for sure, because we also know Nvidia's market power as well. And so as much as it's nice to see small cap participation and such, when Nvidia is lower, we see, and especially now that it's a Dow component as well, we see the market go lower. So I think that, the pressure is certainly on Nvidia. It's highly anticipated. And you talked about, other analysts' updates. We have been seeing those price targets kind of come higher, because if you take a look, the median price target for Nvidia is $150 a share, which is only, call it $6 away from where it's currently trading right now. And that's despite the fact that 90% of analysts rate Nvidia as buy still, despite these really impressive gains that we've been seeing. Now, at the high end, 203 is the highest price target on the street that I can see. So, there are still, and some of the others that we mentioned, as high as 175, 185, there are more bullish price targets than the 150. The low end is one of the 6 hold ratings. That's a $90 price target. But safe to say, a lot of people don't want to bet against Nvidia. There's not a single sell rating on Wall Street, according to LSEG. So, the bar is high. Nvidia has met or beat that bar time and time again. So it's hard to bet against it. But we'll have to wait and see. And also, it doesn't report until the 20th. So little pullbacks here and there too could potentially lower that bar a little bit.
That is true. We do have some time. I hear the 20th, and I'm like so disoriented what day it even is right now. I'm like, okay, so we do have some time before that event. I feel like it's the same risk as we saw last earnings period, where it's to me, the biggest risk is that the same just doesn't move at all, because a muted reaction, I think, is what many are rooting against right now at this point.
Further fueling this optimism is the forecasted availability of Nvidia's Blackwell chip, set to drive a 200% increase in revenues in the April following their launch. As supply constraints ease, the adoption rate among customers is expected to soar beyond initial hyperscaler engagements. In this race for AI superiority, Nvidia seems to have taken an early lead, much like a sprinter pulling ahead in the final stretch, leaving their competitors scrambling to catch up. Piper Sandler's insight underscores the belief that Nvidia's strategic roadmap is aligned with industry trends, paving the way for sustained growth. This wave of optimism isn't without its data-backed credentials. Kumar's analysis aligns with recent spending patterns observed in the industry, further cementing his projections. His evaluation reflects a well-grounded perspective staked on Nvidia's current prowess and future potential. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Welcome back to the Future Show. Now let's bring in Logan Gillen, analyst at Jewel Financial. Logan, thanks so much for joining the show.
Thanks so much for having me.
So we're going to talk about a few big winners last week. Let's start with Nvidia. It's, of course, been a big winner all year. It was up about 9% last week. Could take a little bit of a breather today. If you take a look in pre-market, it's actually back above the unchanged line, but only up about 0.5%, which is not all that impressive for a name like Nvidia. So I was taking a look at the notes, and we, of course, have a couple weeks before earnings, or about a week or so. And you're leery on Nvidia heading into that report. Tell us why.
Yeah, I am. I mean, I think the valuation is really the number one thing when you look at Nvidia and the great run it's had. I mean, it's been spectacular, but I think it could be time for a breather. And then obviously you get the election results. That's going to move the stock higher. Deregulation potential in the future obviously helps that. And then the potential of future investment into AI, which has been their staple and why they've done so well over the last 2 years or so. So, I mean, I see this company still being in the conversation, still being in the game. But I do think as we're coming into earnings seasons for them, I think investors are looking for chinks in the armor. They've been basically perfect on some of these recent earnings reports, but still the stock has moved lower, especially after the last one. So I think we could see some weakness in the stock, similar to how we saw Meta and Microsoft, who had 2 really good earnings reports this year, or this last quarter, but then the stock moved lower just based on the small nitpicky things that investors were looking for. With these valuations, I think you could see that in a name like Nvidia. I think investors are they're wanting to see this consistency that they have had, but they're also looking for some weaker points with the valuation so high in the amazing run that Nvidia's had.
Okay, so just to clarify, Nvidia reports on the 20th, so could be a little priced to perfection, if I understand you correctly. So even if it does post some impressive numbers, might not see a positive stock reaction. I guess my question then is, would you be a buyer on any negativity or sell-off that we see around earnings, or how much of a pullback would you need to see for Nvidia to look attractive again?
Yeah, I think it'd have to be significant in this name. I mean, again, you've had just an unbelievable run. I don't think we've ever seen a stock make a run like Nvidia has over the last couple of years. So I think it would have to be pretty significant. It's not one that we're jumping into right now. We're more on the downstream of AI, looking at what names could potentially benefit from now all the investment that they've put into AI. I think Meta being one of them, what they ultimately do with this AI space. But Nvidia is one we want to see some significant pullback to a degree. You can't chase stocks either. I mean, we're going to talk about Tesla here in a second, and that's one we do like, but you can't chase it. You can't chase a name like Nvidia after the run that it's had, and we would definitely be holding back and waiting. Obviously, if we saw a significant decline or pullback in the name, we would reevaluate and see if it would be value at that point.
Investors are presented with a compelling opportunity as Nvidia stands poised to capitalize on the tech renaissance driven by AI advancements. With every chip and revolutionary concept, they inch closer to cementing their legacy as a pioneering force in semiconductor innovation. Current forecasts project a sustained upward trajectory for Nvidia, buoyed by their technological prowess and strategic foresight. The stock's current position, near $148, suggests there is ample room for growth as market dynamics evolve. Ultimately, the question remains, will Nvidia meet these heightened expectations? Judging by their strategic initiatives and robust market presence, the future appears promising. So, what are your thoughts on Nvidia's future in the stock market? As the financial landscape continues to shift, Nvidia's journey offers lessons in innovation and strategic foresight. The stock market, in its unpredictable elegance, waits for no one. So the time to engage is now. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there!